I'm about to reveal to you guys the most obvious and easiest trading setup on gold. This setup I've identified has the potential to make you guys thousands of dollars over the next few months. Just make sure you watch this video until the very end. Now, we've been buying gold aggressively since 2019, which is well documented on our channels and obviously our community. Not only have we been trading it, but we've been buying it physically as well. Now, in this video, we're going to focus on the trading aspect of things. Now, when trading gold, the first thing we need to identify is where is the overall trend going? Is the trend trending upwards, or are we seeing a trend to the downside, right? Too many people make the mistake of trading against the trend. So as we can see, gold is trending to the upside. That's as clear as day. Even from a short-term perspective, which we can get into now, you can see that gold is trending to the upside. So looking for short positions is one of the main reasons how people end up making basically silly mistakes, reducing their overall risk to reward probabilities, and essentially just making less money. When instead, if you trade with the trend, you're just going to make more money. And in fact, the main focus of this trading setup is actually going to be where you put your stop loss. That simple. Where you put your stop loss is so important, and I'm going to reveal that in this video as well. Now, why is gold trending to the upside? Gold is trending to the upside because there's so much global instability. You can see that after COVID, that's essentially what accelerated gold's growth, right? That straight line growth. And historically, gold has always been a great hedge against inflation and just the economy in general, right? So gold has always been a safe bet. And of course, we're now at $30 trillion market cap. I think we're going to hit between 70 to 80 trillion within the next few years. So there's a lot of potential gains for us to capture. But let's start off with this trade setup. Now, the first thing that we need to do is identify the trend. That's done. We can see that the trend overall is up, not discounting the fact that we could experience pullbacks, but we need to identify, secondly, where the next area of support is. So if price does go down, if price does reverse short term, where is price likely to go next? Now, the first target is as clear as day at 4,754. This is where there's going to be loads of stop losses, and it's very amateur, and unfortunately this is where people get caught out because price goes down, takes people out, and then reverses and goes to the upside. We've all been caught up by this. I'm sure you're watching this saying, look, this is the reason why I'm having trouble trading gold, because every time I put on a trade, it takes me out and then goes back up. That's fine, because in this video you're going to learn how to stop making that mistake. So where do we put gold then? Where do we put the stop loss? Just below it? Probably not, because price will likely spike below and then go to the upside. Instead, what we want to do is have the stop loss at least, and again, just our first initial buy stop loss, to give it some breathing space. We can have it, let's say 1% low, 1% lower than everybody else's stop losses, or in the middle, right? So we want to have our stop loss really at 4,699. This is where we want our stop loss to be. And the reason why we have to identify our stop loss to begin with, right, is because we are essentially still in price discovery mode. We're essentially at all-time highs. So the question is, where are we likely to go from here? But we first have to identify that risk factor. Now, as you can see, stop loss is about 2.58% away from our entry point, right? So we've identified that stop loss level. Now, in terms of the take profit, as we're day trading here, or we're trading, we need to figure out, are we looking for a short-term position, mid-term position, or long-term position? Now, make sure you guys are subscribed, actually. Make sure you guys are subscribed, because I will be posting more updates on gold and other indices and equities as well. So make sure you subscribe right this second. Also, we do have an AI bot that actually helps us generate these incredible trade ideas as well. If you guys want some more insight into that, click the link in my description, join the free Telegram group. Again, it's completely free. Just make sure you have the Telegram app downloaded, and then you'll get more information about that AI bot that's helped us make thousands over the past few weeks. But anyway, with that being said, you can clearly see we're in price discovery mode. So where do we go? Now, from a short-term perspective, I actually think we'll comfortably surpass $5,000, right? That's going to be the next major headline. However, the risk to reward from where we currently are now isn't that great. Now, here's what we can't do. We cannot just adjust our stop loss, and everybody does this. They adjust their stop loss to make the risk to reward make more sense, right? So if we put our stop loss here, then obviously that risk to reward, it makes more sense and it makes the trade more, worthwhile. However, we've already identified there's a good chance we could see gold sell off temporarily, especially with the new data that's come out surrounding, Greenland, short-term positive data. This could have a negative impact on gold. Why? Because as you know, gold doesn't react well when everything is going well, right? So it's meant to be a safe haven, right? So when things are going bad, it goes up. When things are going great in the economy and, there's no spats, there's no trade tensions, then it will either range or it will do poorly. That's just how gold works. Now, we could see gold go down. So we know that this is probably not a good stop loss target because that's where gold will likely go next. So we have to leave our stop loss at a reasonable level, but at the same time, we can see that that short-term position doesn't make much sense. So here's what we can do. We either need to find a midterm target, which would be from where we currently are now at wait for it guys, 2 seconds, 5,093. That's where we are looking at our midterm target on gold. Again, we could go beyond that, but I'll talk about that on another video. That's going to be a long-term position, and I'll talk more about long-term positions, where I think gold will go in the long term, and some more trade setups on gold. If you're interested in that, once again, subscribe and join the free Telegram group below, and you can send me a message, etc. But for now, this would be that midterm position, right? This is a position that will probably last a week or two, or maybe even 3 weeks, a month. It could even last for, right? But we have to remain patient and let the trade play out. But this would be a position on gold that I would feel comfortable with short term. And as I just said, just with this position alone, you can make thousands of dollars. But as you can see, we have a good stop loss level. We have a take profit level that's actually realistic, or as I said, our AI bot has identified this target, and you'll notice it's below that psychological level. So it's not at a round number, right? It's not at 5,100, it's at 93 because price is likely to hit that target and then pull back again. And if we do think price is going to reverse, or we do think that price is going to maybe hit the 5,000 and reverse, well, guess what? By that point, we'll be able to move our stop loss to break even, which means there's no risk. And if we want, we can cash out at 5,000 if that is needed. But that's a trade setup we've identified right now. I'm giving it to all you guys for free. Well done for making it this far in the video. If you enjoyed this video, let me know in the comment section and I will post some more gold updates. And not only that, join the free Telegram group so you can reach out to me and we could talk more about our AI bot that identifies these opportunities and has an 80% success rate. But anyway, guys, that's it for now. Remember, nothing that you see in this video is financial advice. I am not a financial advisor, so make sure to do your own independent research. And with that being said, guys, seize the day.